Hey guys, welcome to another portfolio update video. So currently it's Wednesday, August 13th at 9:23 a.m. and the portfolio is now up to $352,000. So we're up about 23% all time. And just to add another layer of verification, I'll show you on Blossom that this is an all-time since September 2024. So since September 2024, about 11 months from now, we've been up 23%. So we are double in beat on the S&P 500. So if you're interested in seeing what the portfolio is up to, stay tuned for this video. Also, at the end of the video, I have been contemplating whether or not to just stop the YouTube channel completely, just because of some things that's been on my mind recently and in terms of how the channel is progressing. So if you're interested in that discussion, I'll leave it at the end of the video. All right, so starting with the portfolio itself, I'm going to go through all the different accounts. TFSA, we are up to $139,000 with an all-time gain of $33,000, 32% gain since about April 3rd, 2024. And one thing I really want to tell you about for this TFSA is that I've actually thinking of moving in a different direction with how I'm managing TFSA. In the past, I've been using the TFSA as just a monthly dividend investing portfolio where I just buy ETFs that pays me a dividend every month. So in the past, I was receiving about $2,000 a month in dividends. But actually, I'm also now thinking of switching this to a growth portfolio as well, just like my other accounts. The reason being, I think, just in terms of my appetite for risk, as well as my perspective on investing, in terms of my accumulated experience in investing, has all led me to want to actually focus my portfolio in the next couple of years on just growing it as much as possible. So there's pros and cons with monthly dividend investing. The pro was that it was very stable and consistent and allows me to sleep well at night. For example, back during the Trump puts, April 8th, when all of my other accounts were in the red, like 45, 50% down, it was only my TFSA with my monthly dividend investing strategy that I had a green portfolio. It was the only thing that was up during that time. Now, the con is that it doesn't grow as much as growth. If growth is done properly, you pick the right stocks and you buy in at the right prices and you sell at the right prices, I would say the potential in growth is going to be probably double, if not triple, dividend investing. Okay, so I see growth investing probably like in the 40% to 50% if done well. I see, if you're just strictly dividend investing, like I have a year's worth of that to look at. Like, it was always like about 15%, 16%, which still beats the S&P, but I'm missing out on another 35% that I could be getting, or 25% that I could be getting with growth investing. So as a result, you're going to see that my portfolio is in the process of being reshaped. So I sold out half of my HPYT position. So HPYT is a monthly dividend paying ETF, and I bought ASML because there was a buying opportunity. So last month, ASML reported earnings. They beat on earnings, they beat on guidance, but the stock sold off 15% because the CEO said, we are not sure whether we're going to be profitable or not in 2026. Now, he said that because he's worried about Trump tariffs. But if you actually think about that statement, isn't every company that's listed worried about Trump tariffs? Nvidia, AMD, Microsoft, all of these companies are worried about tariffs. He's the only CEO who's actually voicing it out during an earnings report. So that one statement that's been thrown out there was what caused the stock to go down. So I don't see any problems with the business. It didn't tank 15% in my eyes. It's probably still growing. It's probably still compounding by 20, 25% per quarter. So I decided to buy ASML. I bought 15%, $15,000 when ASML sold off initially, and it hit about 730. And then in a week or two after that, ASML pulled back. So you see here, it sold off from about here to there. And then it went up on the first day, but then it pulled even lower to about 680, 690s around August 6th. I bought another $20,000 worth by selling off of half of HPYT. So now I'm up to a $30,000 position in ASML, and I'm up about 4 to 5%, about $1,500 in the green. So this has been my second biggest gainer or winner in my TFSA. My biggest one is ETHY. This is a monthly paying dividend ETF, but it's following Ethereum. And before the last video, I think I had about like a $10,000 to $15,000 position on it. But I bought another $10,000 to $15,000 after that since the last video, in the middle of last video and this video. And what's been happening is, so you see that this position right now is only about $6,000, quite small. Actually, it's because I've been selling as Ethereum has been going down, just as a way to reduce risk. So if we go back to the first sale last week, I sold Ethereum ETHY on, this is which day? August 8th, last Friday, when it hit $3.80. And then I sold some more when Ethereum hit, or ETHY hit, $4.23. Now, if you look at where the price is right now, it's at 444, so it continues to go up. All right. But what I'm trying to do why I'm selling as it goes up, is just to reduce risk. Although Ethereum is very bullish right now, right? We have a lot of policy that's been put in place that's very pro crypto. At the end of the day, you are still investing in crypto. This is the kind of investment that can drop 80%. Okay. Sometimes when stocks are going up so much, we lose focus of that, and we're trying to chase a bigger number in gain. But that's actually not, in my opinion, the right to do. It's to reduce risk. Okay, Ethereum is getting to near all-time highs, and I believe my thesis is that it will hit a new all-time high, but it might not happen tomorrow. What if it happens in half a year, in a year, after some big pullbacks, right? If it's going to pull back, I want to be reducing my position so that when it pulls back a lot, maybe I want to buy some more. Maybe I want to take my gains early and then invest in something else. So that's why. So I've accumulated from the sale of ETHY about a $19,000 cash reserve on the side. And then, I'll probably just be adding to the positions, once there's been a correction. But next thing is HHIS. This is basically an ETF that has about 10 companies on the S&P that I really like Tesla, Google, Costco, and a bunch of others. I only have a $9,000 investment in this because since I bought it the first time, there just hasn't been another chance to buy more. As you can see, I'm up about 15%, and I didn't want to buy it when I'm up 15%. But if there's a dip that comes in next month or two, I'll be buying more HHIS. So in that order, ETHY is my biggest winner in my TFSA, ASML second, and HHIS is third. HPYT, I'll probably just be using this as another additional cash reserve to buy something if I use up the $19,000 that I have as cash right now. And then lastly, QQCL, USCL. These are two stable dividend payers that track the NASDAQ and S&P 500. So I am up about $852 on the NASDAQ, QQCL, and I'm up about $524 on USCL, which follows the S&P. Those ones I'm not planning to sell anytime soon, and probably buy more if it dips. All right, moving on to the RSP. This one has a mix of winners and losers, so I'll probably start with the winners, and then I'll move my way to the losers. So in my RSP, I do have a small position of Ethereum as well, only about $700.65 worth, but it's up the biggest percentage gain, which is about almost 70%, as you can see. So it's up to about $12.94 right now, with an only $765 investment, and that's probably the biggest gainer in this RSP. My second biggest winner is probably going to be Google. I have a price of $190. and I sold it now, and then now it's up about 6%, which is about $1,200, $1,300. So I did sell a cover call on this, but if this cover call does get exercised on September 5th, it doesn't matter because my book cost is, $190, and I'm selling 195 calls. So I made about $700, $800 of premium selling this cover call, and if it exercises at 195, that's another $700 of gains as well. So I'll be up $1,500 at the least. All right, now we're going into Tesla. Tesla were in the red because when this RSP was inherited by me, it was Tesla was already bought there at 378, so it's a very high price. But I've been selling cover calls for the last 4 months since the spring. We made about a couple $1,000s on that. And as I keep waiting for Tesla to go back up, I'm selling another cover call. So the current cover call that I have is an August 29th expiry at 380. And that's probably not going to exercise. All right, so just want to quickly talk about Tesla before we move on. I told you since the last video when we were going through a lot of pain and agony with Elon Musk, picking fights and plummeting sales in Europe, that you have to understand that Tesla is still a stock I'm bullish in, because I think the reason why it was down and so volatile in the last 3 months is because Elon hasn't been paid yet. And I said that in the last video. Imagine he's been working at Tesla for the last 6 years and he hasn't really been properly paid that whole entire time. Imagine if you got a new job and your employer hasn't paid you for like a year or 2 years. Your motivation goes down. And pretty soon you lose the motivation of working for your company, of doing whatever you can to make sure that the company earns money, right? So the same with Elon. I saw in the last 3 or 4 months, the reason why I didn't sell out of Tesla completely, I may just have trimmed it a little bit, but I kept, my big position in Tesla, is because every time the stock price wanted to go up in the last 3 or 4 months, Elon came out with something that brought the stock down. So for example, let's look at the last 3 months. Look at this spike here, May 27th, 362. Okay, Tesla was moving up from 330s to 362, and then what does Elon do? He comes out and he starts dissing Donald Trump, and so the whole news is talking about, basically Trump and Musk have a fallout, right? And then it goes down, and then it climbs its way back up from 284 to 325 to about 350. And then Elon does one more thing. He goes out again and says, I hate the big, beautiful bill, blah, 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 blah. And that brought, Trump back to reply to him, and it goes back down again. Like, it wasn't, and I don't think it was a coincidence. Every time, it was literally like 24, 48 hours within the stock price reaching 364 and then 350 like you saw there, that Elon Musk came out and said that. It wasn't like the price is at 364 and then after 2 weeks Elon Musk did that. Like, it wasn't like a random time. It was always right afterwards. I think it's because Elon Musk was in the process of renegotiations for his new contract. He hasn't been paid yet. So there was news about a week or two ago that, I think it was around like end of July, early August, when Tesla was around like 300, that, so Tesla's going to pay $28 billion to Elon Musk now just to keep him motivated in Tesla. And look what's been happening since then, since August 1st, from 302 all the way up to 341 right now. It was at 348 earlier this morning, but it's sold off a little bit. And that's a different reason. So no stock is going to go up vertically and never goes down. Okay, it's going to have its dips. We're dipping here because 348 is a resistance area. Okay, so right now it's going to pull back, and you just got to be patient and wait for the stock to gain some more momentum. Maybe it'll hit it a couple more times and pull back again, but eventually it's going to break through. Okay, so we're just going to hold this and not worry about this. We're taking more of a long-term approach on Tesla. Don't worry about the short-term, volatility up and down of the stock. Know that that's what's happening with Tesla. And now that Elon has, $28 billion worth of shares right now, he's going to be working to his best ability to bring the stock price up. All right. Now we're talking about the stocks that are not doing so well, starting from some that are like just barely in the green to some that are like, really, really in the red. Archer is the next one. Archer, the funny thing is, I was actually going to sell out of Archer back in July last month when it was at about 13.92, like 13.50, something like that. Because I do have a $9.83 average. But the thing is, I don't know what happened. Maybe it was a glitch or something. But it said that I had my shares held as collateral and I couldn't sell them. But the funny thing is, there wasn't a cover call on that. Like, it's only held as collateral by my brokerage if I'm selling a cover call, but there wasn't. So leading me to believe that it was a glitch. And then 3 days after that, the glitch was gone. There was no collateral shares held anymore. But Archer tanked from $13 all the way down to like 12, like 11.85 or around $12, and I didn't want to sell that price. And then after that, it just kept on going down, down, down. And then earnings happened 2 days ago, and then it went down again some more after earnings. So, like, if I had it my way without that collateral glitch that I was talking about earlier, I would have sold it at 13, wait for it to drop back to nines, and then bought back in, and I would have made some more money on that, right? But because of the collateral, it cost me like hundreds of dollars, which sucks. But it's fine. I think my thesis on Archer is still fine. I'm gonna wait for the next time it hits about $13 to $14 to sell. So I still like Archer. I'm not worried about this like tanking anytime soon. Honestly, its earnings was mixed to slightly above average, like slightly good. So yeah, my thesis hasn't really changed after earnings. All right, let's talk about the losers now. Okay, so first one is Equifax. I don't think this is really like a loser stock. It's just I think I bought it a bit high. So I bought it at 253, and it's just been tanking since then. And then this was bought before earnings, and it definitely tanked during earnings, as you can see here. It was in the 263s, and it tanked after that to 230s. So now I think Equifax is slowly climbing back up, but it's fine. There's nothing wrong with my Equifax. I'm still going to be holding this. I think the problem that I have right now with Equifax is that I think I got a little sloppy and I put too much money into this. So I put $9,000 into Equifax. I don't think I wanted a $9,000 investment size. Like, I actually like Archer a little more than Equifax, and I only put $5,000, right? Like sorry, we're talking about RSP right now, so never mind. But even the Equifax in my RSP, I do have what is this? A $7,000 position. I still think it's a bit high. I think I would have felt more comfortable at around a 5,000. But whatever. Let's just wait for it to go green, and then if there's something that I want to buy, I'll sell some off of Equifax, trim that position, and buy into something I do want. Let's talk about HIMS quickly. This is a new position I started today. I do like HIMS. I think there's like a 50% potential upside on this, maybe back into the 60s and 70s again. So I just started a small position, only about less than $500. And if it sells off some more, I'll probably be buying some more. So I'm in the 47s, just like the current stock price. New holdings, we have earnings tomorrow. Now, it might sell off just like Equifax did, just like Archer Aviation did. But I think my position right now is okay. It's about $3,000, and I'm only down 0.5% ish, or 0.75%. We'll see what happens. If it does go up, that's great. I might sell then. New was always a bit of like a short-term position for me, like a swing, but think of it as like a long swing. I wasn't looking to like buy and sell out of this in a couple of days, maybe like a month or two. So if there's an opportunity, I'll see. All right, lastly, let's talk about the biggest loser here, and this was a bit disappointing. Sweet Greens. So I did buy Sweet Greens around the $13 range. Okay. And then earnings was terrible. Basically, it sold off like crazy from the 12s all the way down to the 9s, and it hasn't really recovered yet. So I think this is going to take maybe like a bit of time. Maybe if we're lucky, maybe 2 months, 3 months, but maybe half a year is where we see it. But I forgot to mention. So just like I was saying with my TFSA that I'm switching to growth, it's not just growth. I'm becoming more interested in stocks like in 2x, 3x, and 4x. Okay, so you see that I've now started piling in investments that can do that. So Ethereum is one, Tesla is number two, ASML. It can't really 2x, but it could go up a good 40-50%. And Sweet Greens is one of them. So Sweet Greens, like, yeah, it's down quite a bit. But I think if I can stomach this volatility, and if you can stomach it as well, I think this could go into $20, $30, $40 range. Okay, so that's why even though it is down, I can kind of stomach it because I know that it's volatile and it's down right now, but if it's volatile up, that's going to be a huge gain. Number two, a lot of my investments elsewhere are doing really well, so I'm not really worried about like a $2,000 loss on Sweet Greens, and it can only really kind of go up from there. So we'll see. All right, so that's my RSP. I'm gonna go through the non-registered Canadian account pretty quickly. I had four positions this morning, but I sold out of Amazon just to again acquire more cash. So I have a cash reserve of about $9,500 as we kind of go into mid and end of August and move into September. My three biggest positions is my Ethereum. This one is where my main Ethereum position is in, and look at this one. We are up $8,700, 62% gain. I bought this at an average about $11.20. It's now at $18. All right. Once Ethereum hits 4,800 USD, I probably will be trimming, but again, probably not this one. Probably the ETHY you saw in my TFSA. But I'm going to be holding this for quite a bit because Ethereum can 2x, 3x for sure. Google, I started up Google position in this one here, and it's up quite a bit. I think I bought this last week, and when Google is around the 190s, and now it's up to 204, so we have about 5% gain here. And TFSA, sorry, and lastly, Tesla, we're up about $1,500, 7%, 80% up, and I'm probably be holding this a lot longer term. I have about, so you can see I've trimmed my position. In my last video, I had about $28,000 invested, down to about $20,000. Okay, just trimming my position. All right. Lastly, let's look at the non-registered margin. This is all my US holdings, and this is where it gets kind of ugly. And it's not because like I make bad choices. It's because every time I've sold out of some winners recently, so now you're going to see just red right now. So Sweet Greens, we've already talked about that. I have a much bigger position in Sweet Greens in my non-registered margin, $7,000 worth. Okay, so that's going to be a bit of a hold. New holdings I've already talked about as well. Same thesis as back in my RSP. I'll talk about the ones I have talked about. Equifax, same thing. So these three I won't talk about. Oh, and Archer. I'll just talk about OPTT. So OPTT I bought back in like January, February, at a bit of a high price, like 74% I was at. I mean 74 cents per share. That's where I was at. Like a $1,500 position, and my thesis was to get to about like when it gets to $1 to sell. Now the problem is that was back in January, February, so the Trump pups came along and it went down to about 40 cents. So I was down like a good 50%. But since then, like this last month, I believe, OPTT did make its volatile swing up to 84 cents. So I sold out of OPTT with a good 15-20% gain there. And now I'm back into OPTT. Now over average, I like a lot better than last time. Now I'm in about 58 cents per share, and I only bought $1,000 worth. Just like back in January, I had a $1,500 position. I always felt comfortable with a $1,500 position. So if OPTT drops to about 45 cents or so, I'll probably be buying more. I was kind of close to buying more OPTT when it hit like about a good 48 cents last week, but almost pulled the trigger. But I wanted to go down like another cent or two before buying it, but sure enough, it's been kind of going up since then, so that's fine. So I'm down 13%, but whatever. When it swings back up, it's going to be massive. And next month we do have rate cuts, and that's going to be good for these small caps like OPTT. So I'm excited for that. So I have the patience for that. So lastly, that's everything that I want to share of my portfolio. Now I'm just going to talk about the what I said at the beginning. So yeah, I have been thinking about potentially shutting down the YouTube channel. I think reason being number one, I do want to allocate that time to actually make videos for my other business. So I do have like a private education consulting business where I kind of coach students to get into top schools. And that's always been something I've been doing for the last decade, like the last 10 years since I was like in my mid 20s. It's I find it tough to do videos for both that business and YouTube. So just number one, in terms of opportunity cost, I may just get rid of scrap this and go more into my videos for my private business. Number two, I think the other reason is because I think while I do like this account and I do like talking about stocks once in a while, I do have some cost that goes into making these videos. Like I do have a lot of marketing costs where I have to pay these subscriptions like amount every month. And I just think that like the amount of money that I am making from this is not really helping me stay afloat. Like I'm basically in the red talking about stocks when I have more important things to do, like my family, my full-time job, my second job, and doing private education, consulting, and also managing my own stocks. So it's kind of like while I like doing it, it is costing me money to do that. And you guys, some of you are watching me as this kind of person who's kind of savvy with investing and portfolio, but would you really want to follow someone who's doing a business who's in the red and continues to maintain that business, right? So that's where I kind of thinking about drawing the line. Like I'm probably putting like tens, probably like $50 a month just to keep these videos afloat in terms of doing YouTube and stuff. And I'm just wondering, like maybe I should just stop that and do the other one. So those are two very practical reasons for why I want to stop doing it. And number three, I think I don't. I think when it comes to this channel, I think there's a lot of just me talking, and there's not many like interaction. I feel like there's people watching and there's subscribers and everything, but I think people are just coming here to watch my videos to hear me talk about the stocks, the things I have, maybe give them some ideas. But there's no like back and forth. There's no community. There's no conversation. There's no dialogue. So when that happens, it just kind of feels like I'm talking to a wall. I think I'm not saying that I deserve to have a community on YouTube that's really great and very positive and very back and forth. I'm just saying like that's kind of like what I envisioned, and because like it's been a year so far, I haven't really had that. Then that like it while it's not, I'm not saying like I deserve it. It is very demotivating. It's hard for me to take money out of my own pocket and make these videos when there's not much of a community. Everyone's just kind of like watching me to get some good ideas for their own investments, but not really interacting with me. And that's totally fine. People can do that whatever you want. But I'm just saying like these are the reasons why I'm feeling demotivated and maybe like I'm considering stop doing videos because a lot of energy goes into these videos that you guys may not know. I have to watch stocks, prices to get in, to get out, what to do with them. I have to, sometimes have some notes to like know what I'm going to be talking about in that video. I gotta pay for all these subscriptions. I have to also do editing, and also I also have to do something. It's weird. Like it's because you're dealing with tech. Every time like when I do a setup, it takes longer than expected because maybe the OBS Studio is not working, or maybe the webcam is not hooking up, the mic is not hooking up. I'm using other tech so you can see the screen of my cell phone, and then it takes me like a lot of time to just figure out the tech. And something I gotta tell you guys about me is that I'm a big investor and I'm a big talker, but I'm not a very good tech person. Like I'm not a video maker. That's always been a thing that's very like draining for me doing these videos and doing YouTube because I love to talk and I love to invest, but I just don't like making videos. Like so because I have to do everything by myself, kind of like a one man team that also does eat a lot of time into making these videos, which, when now that I have other priorities that I'm thinking about that. So that's where I'm at. Maybe I will could do these videos, but right now I think it's more likely that I'll probably stop at some point in the short, maybe in the foreseeable future versus continuing. But again, nothing is finalized at this point. We'll see in the next couple of weeks where my head is at, and go from there. Okay. So thanks for tuning in for this portfolio update. If you make it this far and you heard all that, that's awesome. I mean, all of us want to make videos, so we want to be heard. So I appreciate the time to listen to what I have to say. All right, that's it for now. Bye.